If you're a landlord in California, you've probably felt it. That feeling of being squeezed. It's not just about finding a cheaper investment property, it's about finding a financial safe haven, a place where the laws actually support you and your investment can breathe again. For years, California landlords have been navigating a minefield. You know the story: suffocating regulations, razor thin profit margins, and the constant anxiety of what new Bill Sacramento will dream up next. But what if there was a place just a few hours' drive away offering a completely different world? Even if you ultimately decide not to invest out of state, you owe it to yourself to understand the alternatives to continuing to invest in California. If you're a California landlord, you need to listen up. As of January 1st, 2026, a fresh wave of new regulations is crashing down on your business. A new law, Assembly Bill 628, now forces you to provide and maintain a working stove and refrigerator in all of your rental units. This is now a basic habitability standard, right up there with running water. Think about the cost, the logistics, and the liability, and that's just one of the new laws. There are others, like Senate Bill 610, that indicate your responsibilities after a natural disaster, adding yet another layer of complexity, and even a few more. One that has to do with tobacco residue, and another that has to do with elevated elements. This isn't a shocker, is it? It's a pattern, a relentless creep of rules that makes it harder and harder to actually make money as an investor in California. And it's why many savvy investors are looking across the border to a state that is actively rolling out the red carpet to them. In the next few minutes, I'm going to show you why Northern Nevada is becoming the number one destination for investors who want to protect their cash flow and finally start growing their portfolio again. Let's be real about the environment in California towards investors. It feels like you're trying to run a business with one hand tied behind your back. As a California real estate broker for over 30 years, it is disheartening to see the steady slide of landlord rights eroding away. The core of the problem is the Tenant Protection Act, AB 1482. This law caps your rent increases at 5% plus inflation, with a hard ceiling of 10%. On paper, that might seem doable, but with insurance costs, maintenance, and property taxes soaring, that cap is a financial straitjacket. You can't adjust to the real market, and your net income just gets chipped away year after year. And then there's the eviction process. If you get a tenant who stops paying or breaks the lease, you're staring down the barrel of a legal fight that can drag on for months. The whole system is designed to favor the tenant, leaving you to cover the lost rent, court costs, and attorney's fees, all while your property is held hostage. Every landlord in California has a horror story. It's a system drowning in uncertainty and financial risk. And just like we saw with the new 2026 laws, it never ends. Every single year brings a new list of rules, new hurdles, and new ways you can get sued. It's a constant state of anxiety. You're not just a housing provider anymore. You're expected to be a legal scholar, a social worker, and a financial wizard, all while your profits are systematically legislated into oblivion. This is the agitation that's fueling the exodus. Landlords aren't just leaving, they're fleeing, and they're finding refuge just next door in northern Nevada. So let's talk about one potential solution. Why is northern Nevada, especially the Reno area, becoming a sanctuary for investors? It all starts with the one thing California has destroyed: landlord rights. First and foremost, let's talk about the game changer. Nevada has no statewide rent control. Let that sink in. There are no state mandated caps on what you can charge. This means you have the freedom to adjust your rents to fair market value. If your expenses jump, you can adjust. If demand in your area explodes, you can adjust. For a standard month-to-month tenancy, all you need to give is a 45-day written notice to your tenant before an increase. This one policy difference hands the power back to you, letting you run your investments like a business, not a subsidized housing program. Next up, the eviction process. It's not just a little better, it's a whole different universe. Nevada law features a summary eviction process that is built for speed and efficiency. For non-payment of rent, you serve a 7-day notice to pay or quit. The tenant then has 7 business days to either pay up or move out. And here's the crucial part. If they want to fight it, the burden is on them to file an affidavit with the court. If they do nothing, you can get an order for removal, often within weeks, not the months-long nightmare common in California. This streamlined process doesn't just save you a fortune, it restores your control over your own property and gives you the certainty you need to invest with confidence. Now let's talk about the massive financial advantages. The legal protections get investors to the table, but the numbers are what make them sign the papers. Nevada serves up a slate of financial benefits that California just can't touch. First, and most famous, no state income tax. For a California investor in a high tax bracket, moving your rental income to Nevada can mean an instant saving of between 9 and 13% boost to your net profit right off the top. It's like giving yourself an immediate and significant raise. Second is the property tax shield. In California, Proposition 13 protects existing owners, but every new buyer gets hit with a tax bill based on the new higher purchase price. But in Nevada, property taxes are not automatically reset upon sale. Instead, state law caps the amount your tax bill can increase each year, up to a maximum of 8% for investment properties. This means you inherit a lower tax basis that stays low, giving you predictable, lower cost from day one and saving you thousands annually compared to a new purchase in California. In this one example I looked at on a pro forma cash flow for a $560,000 Reno duplex, the taxes on this unit are currently $1,068.96 per year. In California, the property taxes on that same price would be around $7,000 per year. In that one line item, there is a savings of nearly $500 a month. Third, your hazard insurance is dramatically cheaper. The average landlord insurance policy in California costs around $1,700 a year for a duplex, and we find them starting closer to $2,000 now. And that's if you can even get it in a high risk fire zone. Nevada, however, is one of the most affordable states for landlord insurance, with median premiums running nearly 40% below the national average. That can mean an extra $100 a month or more in pure cash flow per property. Fourth, even your operating costs are lower. Basic utility costs are significantly cheaper in most parts of Nevada than California. In California, you pay around $135 per unit for water, sewer, and garbage. On the same Reno duplex, the same utilities are running about $110 per month per unit. That difference adds up, lowering your expenses and boosting your net operating income. When you look at all those financial differences, you will see that the typical GRM for a break even is much closer to 15 and a quarter in northern Nevada, and the GRMs for available properties are closer to that higher break even too, though. But it's not just about higher income, it's about a more favorable treatment all the way around towards landlords in Nevada, easier evictions, less regulations, no rent control, and much less anxiety in owning property in Nevada. Finally, you have the relationship between property prices and cash flow. The Reno real estate market is projected to see a medium home price in the $550,000 to $600,000 range in 2026, and duplexes in the $500,000 to $800,000 range. There are also more affordable suburbs with single family homes in the 350 to 4 and a quarter range. For a lot of California investors, this is huge. You can sell one high value, low performing property in California, say a condo in the Bay Area or a duplex in Orange County, and have the capital to buy two, maybe even three cash flowing properties in the Reno area. You're not just moving your money, you're multiplying your doors, diversifying your assets, and dramatically boosting your monthly cash flow. You're trading a single massive headache for multiple streams of stable income. But making this type of decision shouldn't just be about a short term cash flow difference, if there was one. It's also about the long term growth engine. A friendly legal and financial setup is great, but smart investors want to see a future. You want appreciation. This is where the Northern Nevada story gets even better. This isn't a speculative bubble. It's a sustainable growth fueled by powerful economic fundamentals. The main driver is a classic supply and demand crunch. Northern Nevada is seeing a massive influx of jobs led by giants like Tesla, Panasonic, and Google, who have poured billions into the Tahoe Regional Industrial Center. This pivot to tech, manufacturing, and logistics has created thousands of high paying jobs, and all of these new employees need a place to live. At the same time, the supply of housing, and particularly small multifamily properties, is seriously constrained. Right now, there are only 19 duplexes in the entire MLS covering a large portion of northern Nevada. Studies have highlighted the limited inventory of developable land in Washoe County, too. And unlike other Sunbelt markets that can sprawl for miles, Reno is boxed in by geography. This creates a natural floor that helps support property values. This combo of red hot demand and limited supply creates a stable, predictable runway for appreciation. While the crazy double-digit jumps of the past are leveling off, experts are forecasting a healthy, balanced market with modest but sustainable price growth for 2026 and beyond. It's a market where you can get both immediate cash flow and long-term capital appreciation as well, all powered by the relentless exodus from California. Look, I get it. Making an out of state investment feels like a huge step. But here's the best part: you don't have to deal with a stranger. I've been licensed in Nevada for 2 years now. So if you decide to look in Northern Nevada, I will still be the primary agent helping you. You've got questions about the best neighborhoods, how to manage rentals from a distance, and just how to get started. That's why I'm here. My team and I specialize in helping California investors make a smooth and profitable move into Northern Nevada market. I get it. I know exactly what you're facing. So if anything I've said today hit home, if you're just done with the regulations and lousy returns and the constant stress of being in California landlord, I want to invite you to take the next step. Look in the links below or the QR codes on the screen for some links to local properties. The choice is getting clearer every day. You can stay in California and hope things get better, watching your profits get smaller while your risk gets bigger, or you can join the thousands of other smart investors who are moving their capital to a state that actually respects property rights, rewards investment, and offers a clear path to building wealth. Northern Nevada gives you a legal shield with its landlord-friendly laws, a financial leg up with its favorable tax structure, and a powerful engine for long-term growth. It's the definition of a real estate safe haven. If you're ready to learn more about how you can be a part of this great landlord exodus, all my contact information is right here. Shoot me a text, send me an email, or click on the links in the descriptions to set up a free strategy call. Let's talk about your goal and see if making the move to Nevada is the right play for your portfolio. Don't wait for Sacramento to pass another law that makes the decision for you. Take control of your financial future today. And if California is still a place you want to invest, me and my team will continue to service Sacramento and the Central Valley the same way we have for the last 35 years.